Hello and welcome. My name is Mr. Barasa, and today I'll be talking about this insightful video where we delve into 7 types of income you can earn in Kenya. So whether you are aiming to diversify your income streams, enhance your financial stability, or simply just to learn more about different earning opportunity, then this video is perfect for you. So you have to understand these income types. It's very crucial for anyone looking into improving their financial literacy, as well as securing a prosperous future when it comes to finances. So I'll talk about these 7 types of income that are very, very crucial when it comes to earning here in Kenya. But this can also imply for those who are not in Kenya, but mainly I'll be discussing concerning Kenya earning. You are welcome, and let's get started. So number 1 type of income is actually it's called earned income. So when I talk about earned income, this is salary or wages income that one earned through formal employment. This is where one receives a fixed amount of an income. Periodically, it usually it's on a monthly basis, but at some time it can be weekly, but at the end you find that it comes periodically. So it's very common in both public and private sectors. So you find you've been employed and you are being paid like monthly or weekly. And then the key point here is that you'll find them being deducted some amount like pay as you earn. We have NSSF, that is National Social Security Fund, and we have NHIF, that is National Hospital and Insurance Fund. So this contribution actually they are deducted from the employee for the future benefit of that employee. So you find that if you're being deducted as a NSSF, this NSSF goes to your fund. In case you retire, this is where you will get this money to help you in terms of having retired and now you want to relax and do your own things as you have already retired from the job. Number 2 is actually the business income. So you will find that in this, income is generated from operating a business, and this can range from small enterprises to large corporations. And in this, it can also include profits from selling goods or services. So you have, at least in this one, entrepreneurs and business owners, they are responsible for managing business expense and taxes, as well as ensuring profitability is attained at the end of the business or operation. So this is, if you have any kind of a business that you're operating yourself, then this is the number 2 way of earning, which means you have a business, and then we call it a business income. Number 3 is actually rental income. So if you have some plots, if you have land and you build either commercially or just residential areas where you have leased out and people are paying you, or you are looking forward into entering into real estate, where you are going to lease this property to other people, and they be paying you on a monthly, that comes to a rental income. So income earned from leasing out properties such as residential houses, apartments, or commercial spaces. This is what this income means. So you will get that the landlords receive rental income from tenants, and they must comply with landlord-tenants law and declare rental income taxation purpose. So in Kenya, you'll find that in these rentals, you have to be taxed, and by doing that, that's how the government raises its tax. Number 4 way of earning, it's called an interest income. So if you've saved your money in a bank, if you've saved your money or invested in a fixed deposits, treasury bills, or even bonds, where financial institutions pay interest on deposited funds, then this categorizes that kind of investment into an income, into an interest income. Why? This is because the interest income is subject to withholding tax, and individuals can earn passive income based on the interest offered by financial institutions. Now, for treasury bills and bonds, whenever you invest with these government security, you will find that you will be paid periodically, and most common you'll get that in bonds you'll be paid semi-annually, where you will have invested your principal amount, and this principal amount will be generating an interest above on what you had put as a principal, and then after that you'll have to withdraw all your money if you want to withdraw at the end of the maturity investment term. So if it's 10 years, you'll be getting semi-annual coupons twice a year, and at the end of the 10 year, you'll have to withdraw all your principal amount that you had invested with the bonds. Number 5 way of earning, it's called dividend income. So this is income received by shareholders from companies which they own shares. It represents a portion of the company profit distributed to shareholders. So you'll find that if you've gone ahead to invest like in a SACCO. So for the SACCO, you have to buy shares, and by you buying shares, you get to receive dividend at the end of the year. By you investing in stocks, if that stock keep increasing in the price, you go and be given dividend at the end of the year. So like for Nairobi Security Exchange, that's what I'm talking about the stocks. This is how you can invest in these stocks. So you find that it distributes dividends based on profits, and shareholders may receive dividend periodically. This is one way of earning dividend income. So if you want to go ahead and have a dividend account, dividend income, then you can do it with the circles, you can do it with the Nairobi Exchange Security, where you can invest in stocks in different sectors, and mostly you have to having it diversified, because you don't have to just to do it on a one kind of a sector in terms of investing. So you must consider, if you want to go into stocks through Nairobi Exchange platform, then you must do that, as well as diversification of your investments. Number 6 type of earning income, it's actually commission income. So you find that in this income, it's earned by salespersons, agents, or brokers based on the sales they generate. It's commonly in sectors like real estate, insurance, and other sales. Income varies based on sales performance. So if an agreement, if you have an agreement with that employer, or if you have an agreement with the person that you are doing the sales for, then you find that it's very crucial for individuals to understand commission structure and repayment terms, so that you don't go into conflict whenever you have done a sale into this. And if you are a good salesperson, I can tell you today, get the best venture you can ever enter and not regret, because sales can easily make you rich and wealthy. So you have to consider that if you have that passion and the zeal to do this, because this is what I can actually recommend as a salesperson. Number 7 type of income, it's royalty income. Royalty income, this is an income earned from allowing others to use intellectual property such as copyright, patents, and trademarks. So it's common among creators and inventors. You find that if you've invented something, or you've invented an idea, this idea goes ahead to bring you money, as you are just seated and you have already put an MOU with the kind of person who is using that idea of yours, as well as making money for you. Now, these royalties are paid based on the agreement between intellectual property owners and users, and income can be periodically or a lump sum payment. In this case, I'm talking about you being paid with a kind of accrued amount, or it can be paid periodically, depending on how the agreement or an MOU was signed between you and the person that is using the idea that you had put in place. So you'll find that this is actually one of the among the best things, type of income you can do, and have to enjoy these privileges even in your whole lifetime. That being the end of the type of income, I would like to say that understanding these types of income, it's crucial for financial planning, tax management, and diversification of income sources. So you'll find that in Kenya, often, if you combine these several income of streams, it can help you to ensure that you have stability when it comes to finances, and your growth will actually be seen exponentially. So I would like to say that you have not to rely on one kind of income stream. If you are unemployed, that's commonly in Kenya, this is what we actually see in most cases. People rely most on jobs, that being number one type of income that I've just discussed as being an earned income. So you find that if you just rely on an earned income, then you are one step closer to poverty. Why? Because if anything happens today, you go ahead to lose that job. If you lose that job, that means you'll go back to zero. And that's very important for you to go ahead and consider doing some other other types of income, like business income, like royalty income. If you are creative enough, you can go ahead to do that. And this can be done as you have your job, other side hustles, as you keep to increase in terms of your income from the other side hustle. And by you doing that with consistency, with a bit of patience, then you can, at the end, you can find yourself having quit your job and majorly focusing on that side hustle that you have started, and can easily make you rich and wealthier within some period of time. And by you considering that, you have your stability when it comes to finances. My name is Mr. Barasa, and if you've clicked on this video until this far, I would like to say thank you very much, as I'm looking forward to have you in the next video. Kindly let me know what you've liked most in this video, as I'll be coming back with other types of video just like this to educate ourselves in terms of finances. So consider subscribing, liking, and sharing this video so that we can also grow our audience in terms of engaging in this money kind of talk. So see you in the next video.